On today's hot sheet, I'm discussing this morning's CPI data, the top 10 markets for first-time homebuyers, and this week's unemployment claims. Today is Thursday, January the 11th, 2024. I'm Byron Lazine, and the hot sheet starts now. Welcome into today's hot sheet. Let me know in the live chat which market you are tuning in live from. I'm back in my Naples, Florida studio and happy to be here on this Thursday morning. We've got a whole bunch of news here that we've been waiting, specifically the CPI. Everything that we look at is through the lens of inflation. Inflation, of course, is what's impacting the decisions from the Fed the most as they try to get back down to their 2% target. So let's take a look at where we ended up on today's CPI read. Consumer Price Index released this morning at 8:30 a.m. Eastern. CPI for all urban consumers increased 0.3% in December on a seasonally adjusted basis. This is after rising 0.1% in November. This is, of course, according to the U.S. Bureau of Labor Statistics. Over the past 12 months, an all items index increased 3.4% before seasonal adjustment. We know that the target is 2%, so we're above that. By the way, the 0.3% that we just saw here in this report for December is above expectations. Expectations were 0.2%. Okay. What we really care about is how this relates to housing, how it's going to impact housing, of course, and what they say about housing here in the CPI. And just like a copy and paste here on almost every CPI report lately, the index for shelter continued to rise in December, contributing over half of the monthly all items increase. The energy index also rose. That was 0.4% over the month, as increases in the electricity index and the gasoline index more than offset the decrease that the natural gas index had. The food index increased 0.2% in December as it did in November. Okay, so how do the markets feel about this? That's just the numbers. Those are just the black and white data there. If we go to Wall Street Journal, headline says inflation edged up in December after rapid cooling for most of 2023. And that is true. We saw a huge deceleration throughout 2023 in inflation. Inflation firmed up at year's end after the pace of price gains fell by nearly half in 2023. And then reporting the numbers that we just went over, you see the chart here from Wall Street Journal, Consumer Price Index change from a year earlier. And you see there overall the 3.4%, which is the number that we just covered. But then you see core in the pink, and core is at 3.9%. Okay, that's down. Core inflation was at 4% in November. So that is slightly down on the annual increase on core inflation. Core prices strip out volatile food and energy items. Okay, so the increase was 0.3% for core, just like it was for CPI in December. It's up for it. It's 0.3% from December from the prior month. It's the same monthly increase as November, and it is slightly faster than what would be consistent with the Fed's long-term inflation target of 2%. But again, that annual number on core is slightly down from 4 to 3.9. If we look at more reactions to this, I'll go to the Twitterverse. I'll go to Logan Motoshami's Twitter X. And he shows the chart here of CPI, which is linked up. All these slides are going to be linked up for you inside of BAMX to make it easy. You do have the 1 month, which is a pop from October and November. But if you look at the 12-month percent change here, you do see a deceleration overall. That's what we've been experiencing. Okay, but here's the big tweet from Logan. So here's the reaction that I think everybody here in housing will appreciate. Same story as always, meaning this is the story we have been discussing. Shelter inflation taking off again is necessary for you to get the 1970s second wave of core inflation going higher. You can see here that while shelter is high and is making up over half of the CPI increases, it is in a deceleration trend. It's in a downward trend overall. And Logan's point here, Logan Motashami from Housing Wire in this tweet, his point is that this would have to reverse trend and take off once again, as it did, obviously, in late 2020 and into 2021 and throughout 2021 and into early 2022. It would have to take off in an upward spike, but we are on this downward trend. So to him, we're still heading in the right direction despite the little blip, despite the slight miss that we've experienced today. He's looking at this positively, in with all things considered. Okay, so that now we expect this number too. By the way, if you've been following here the hot sheet, you know this. We expect this number to start to drop, at a much faster rate than it is when what we're seeing on real-time data for specifically rent prices start to catch up with the reality of how they report these numbers into the CPI. If they were to take that into consideration, you would see a much faster drop in shelter. Shelter makes up 35.17% of CPI. That's different from the number we said before, where half of the increases that happened in December, half of those 0.3% increases were shelter related. Shelter just is weighted at 35+%, more than a third of total CPI. Rent of primary residence is 7.7, and owner's equivalent rent of residences is 26. That's that made up make believe number. Rent of overall shelter went up to 0.5% on the month from 0.4 in November. And then rent of primary residences went down from 0.5 to 0.4. So maybe we'll start to see that, data come in and start to drop. It did drop 0.1% here. Owner's equivalent rent of residences stayed flat at 0.5%. The most egregious number that we track in all of the economy. Okay. Some other noticeable drops. You had fuel oil down 5.5 in November, and any other big drops? That would be, I guess, the biggest drop here on this list. We'll put the table and all this information for you available in BAMX for our BAMX members. You see here all items 12-month percent change up to that 3.4%. Food, which can be volatile, is just under 3. Energy is down, and then all items less food and energy is that 3.9. That's that core number there in the bar graph to make it easy for you. All right, that I think would wrap up where we're at on this CPI report. I will just say, one thing when we look at, yes, rent prices are dropping and we expect shelter to come down. Lance Lambert, who was on Knowledge Brokers podcast last week, has been out front about this being his biggest concern for 2024. And I would agree. Housing market is being hit by home insurance shocks. Shows here really the Southeast, all of the Eastern seaboard, as well as, crossing the Gulf into Texas, having the biggest hit right now on insurance. We're in the middle of something of a home insurance shock, and it's particularly sharp markets in states like obviously California, Florida, Louisiana. But you see all of these markets again on the eastern and southern seaboard that have had high insurance increases, and this will impact not just the market, but this will actually impact homeowners who have been kind of locked into those low rates. This is going to impact their affordability. This is an inflationary measure against homeowners. So this is something to watch, and something that could impact inflation is the cost of homeowners insurance, which seems to be out of control. And I know there was a primary debate last night. I didn't listen, but typically when you skim the results of these, presidential debates, you don't hear anybody talking about this. And I agree with Lance. It's a huge issue. He talked about it again on last week's Knowledge Brokers podcast. You should go check that out. If you haven't done it already, it's on a separate channel at Knowledge Brokers podcast. This week, tomorrow, on Knowledge Brokers Podcast. Danielle Hale will be joining, chief economist from Realtor.com, also the author of this piece of data just released, the best markets for first-time home buyers in 2024. Okay, what are these markets? I am not impressed. Maybe you are. Maybe you work one of these markets and you want to convince me otherwise, but these are really small markets. Look at the number one market, according to Realtor.com, as being the best for first-time home buyers. It's Iron Dacot, and I'm hoping I'm saying that right. Iron Dacot, New York, is essentially in Canada. Okay, Iron Dacot, New York, is the middle of absolutely nowhere. Then it's followed by Benton, Arkansas, Winterset, Iowa. Then you have Newington, Connecticut, Council Bluffs, Iowa, Cheektowaga, New York, Grand Rapids, Michigan, Moore, Oklahoma, Mattydale, New York, and River Beach, Maryland. What do these all have in common? Nobody wants to live there, okay? Or very few people. These are affordable homes, lower cost of living, and easy commute times put these cities at the top of our list. I'm not sure in Iron Dacot where the heck you're even commuting to unless you want to get across the border into Canada. But these are Realtor.com's top 10 best markets for first-time home buyers. You can see the prices here. Iron Dacot at $187,000. Newington, Connecticut, $290,000. Maybe good luck though with that. And that would be the highest on the list. Iron Dacot being, Mattydale, New York, at $138,450 is the median listing price in Mattydale. If you work any of these markets, love for you to jump into the chat. Maybe I'm wrong. Obviously, Grand Rapids is a pretty well-known area, and Newington, you're outside of Hartford County. Here are the metros on those areas. Iron Dacot is a metro of Rochester. Benton has a metro of Little Rock, Arkansas. Winterset, Des Moines, which is where I believe where that debate was last night. Newington is a metro of Hartford. Council Bluffs is Omaha. Cheektowaga is in the Buffalo region. Grand Rapids is in the Grand Rapids region. Okay. Moore is in Oklahoma City. So maybe Jody knows something about Moore. I don't know if Jody works there. Jody's from OKC in the chat. Mattydale is Syracuse region, and then Riviera is in the Baltimore region. Okay, so with these cities ranked highly overall, many still have strengths and weaknesses that require prospective buyers to consider trade-offs. Only Benton, Arkansas, ranked as good or better than the average city or town for each of the 8 metrics comprising the index. Otherwise, buyers may face trade-offs between inventory availability, real estate market growth, commutes to work, or lifestyle. So there you go. I think that's going to be a big trade-off in a lot of those markets. But this is something that this will get clicks. So congrats to Danielle Hale, Realtor.com, for obviously putting this study and this piece together. And it might be something for you to consider to rip off and duplicate in your market. Okay, what are the top 10? What are the top 5 first-time homebuyer markets here in X county or X state that you're an expert and might be a great piece and to duplicate? We'll have this linked up in BAMX for you if you want any further information on that. As we're tracking the CPI, we're also tracking jobs. Okay, jobs can have significant impact on whether we avoid a recession or not. And in the weekend in January 6th, the advanced figures seasonal adjusted initial claims was 202,000. That's a decrease of 1,000 from the revised level. The previous week's level was revised up by 1,000 from 202 to 203. So really no change here. 4-week moving average 207. That's similar to last week. The seasonally adjusted insured unemployment rate was 1.2% for the week of December 30th. That's a decrease of 0.1% here. You see we're not really kind of just flat on unemployment and initial claims. So job market continuing to be really strong right now. And we got a little bit of a hotter than expected CPI report. And so let's take a look at how the market is reacting to that. Specifically, what did the 10-year do here today with this information? 10-year, it was under right before the CPI was under 4%. Then it kind of bounced up as high as 4.072, and now it's kind of ticked back down, getting closer to a 4. So if we just kind of look at the chart here, maybe it won't let me look at the chart. I know where to find a chart. Let's go to CNBC. Let's go to the 10-year. Here we go. And so you see here, let's go to 1 day. This is kind of what happened today. Okay, so this is right before, on the left here, this is right before CPI came out. CPI came out, it jumped up, and now it's come back down to about 4. So still just above 4. There's been 4 times this year so far that we've dropped below 4%. So, I mean, we're only, 11 days in. Expect more of the 10-year bouncing up and down below 4 and above 4 here until we really get a feel for, when the Fed's going to be cutting rates. You've got a 30-year yesterday at the end of the day at 6.78. I'll see what happens today based off this news and how the markets continue to react throughout the day. Right now, the Dow is down a tick. S&P and NASDAQ are both up a tick, but really coming in flat from yesterday. Not really much of a change there. If you want to change your approach to your game here in 2024 or be the most prepared, sign up for the BAM Pro Bowl. This is a free virtual event for real estate professionals. You can grab your seat with the link in the description. And we have power players, all-star lineup like Ryan Serhant, Neil Dingra, David Childers, Jason Bantana, Gary Gold, Danielle Garofalo, Marie Lee, Jimmy Mackin, as well as myself, Eric the Broke Agent, Luca from Actually Agents, and we have an anthem from Amanda Bradford. We've got a ton of great content coming out of this. It's a 3-hour free virtual event on February 7th, week of the Super Bowl. Hit the link to sign up for that. And of course, to get the most out of everything we do at BAM, join BAMX. Use code HOT to get 10% off of that. So you get all of our hot sheet notes each and every single day, like today's hot sheet notes, which are super robust and you can use for your marketing, your emails, your data sharing with your clients, as well as our daily downloads. All of the slides will be available for our BAMX members, our monthly courses, live streams, and of course, our fantastic Facebook community. Use code HOT to get into BAMX today. That is today's hot sheet. Tomorrow, we've got a PPI report. So back-to-back inflation. We'll see how the PPI report looks. Remember, CPI is the investor's favorite report. The PPI is the Fed's favorite report. So that one comes out tomorrow. Tom Toole is going to be breaking that down with you. Monday, we are off in observance of Martin Luther King holiday with the markets being closed, and we'll be back then again on Tuesday. So tomorrow's hot sheet, Tom Toole, PPI, plus your questions on a free format Friday. Hope everybody has a great day, and until tomorrow's hot sheet and tomorrow's Knowledge Brokers pod with Danielle Hale, toodaloo.